And of course, you can't overstate the incredible might of China manufacturing. And so I think the Chinese companies are formidable, and they have every right to be formidable, and China has every right to want their companies to succeed.
Nvidia is collapsing in China. Even after Trump met Xi Jinping and announced new trade deals, he couldn't save it. In a recent interview, Nvidia's CEO Jensen Huang admitted they once held 95% of China's chip market. Now they have zero. That single fact shows how fast everything changed. Nvidia ruled China's AI industry. Today, it's completely shut out. Billions of dollars gone.
I was about to answer your question, how big of a market opportunity it is. I would say it's probably $50 billion this year. It's probably, call it a couple of $100 billion by the end of the decade.
This downfall came right after Trump promised to reset trade relations. While the cameras showed smiles and handshakes, China was already making its move. Huawei's new chips have replaced Nvidia's, and Beijing told its tech giants to buy local, not American. So stay tuned, because what's happening right now isn't just Nvidia's loss. It's America losing its edge, while China quietly wins a war no one saw coming. 2025 was supposed to be the year the United States and China took a new path. After months of tension, President Donald Trump met Chinese President Xi Jinping in what the media called a breakthrough summit. But this was also the meeting that proved once and for all that China does not need the United States anymore for its chip supply. And what this means is that Nvidia is in real trouble. The handshake in Beijing hadn't opened the Chinese market. It had done nothing at all. China wasn't buying Nvidia's chips, and the so-called deal had no real impact on U.S.-China trade relations. Behind the smiles, Beijing had already decided to move on from American technology. The companies that once depended on Nvidia's powerful AI chips, Alibaba, Baidu, Tencent, were now turning to local suppliers. This was a complete collapse of trust between the world's two biggest economies. Nvidia's fall from dominance in China revealed something much deeper about America's position in 2025. The country that once ruled global technology was now losing its grip. Nvidia is not just another tech company. It's the beating heart of America's artificial intelligence empire. As of 2025, it is worth over $5 trillion, making it the most valuable company in the world, above Apple and Microsoft. Its chips, the famous GPUs, power everything from AI research and autonomous vehicles to military simulations and data centers. More than 80% of global AI computing power depends on Nvidia's architecture. In short, without Nvidia, the US cannot lead AI. That is why China matters so much to Nvidia, and by extension to the United States. Until recently, China accounted for roughly 20 to 25% of Nvidia's total revenue, an estimated $12 to $15 billion annually. In 2023, that share was even higher, as China's cloud giants, Alibaba, Tencent, and Baidu, raced to build massive AI infrastructure powered by Nvidia's H100 and A100 chips. Losing that market is not a small dent. It's a gaping hole in America's tech economy and its geopolitical leverage. The US government knows this, which is why every administration, even while restricting high-end exports, has quietly pushed for partial access to remain open. Washington wants Beijing to keep buying, just not too much or too advanced. This is the irony at the core of the US-China chip war. America wants to sell billions of dollars worth of Nvidia chips to China, but it also wants to deny China the best versions of those chips. Nvidia's most advanced products, like the H200 and the coming Blackwell series, are classified under export controls, labeled as too strategic to fall into Chinese hands. The US wants China's money, but not China's progress. It's a business strategy disguised as national security, and the contradiction is tearing apart the very market America built. But here's the twist. China doesn't need the best Nvidia chips to compete anymore. Engineers in Beijing and Shenzhen have learned how to couple multiple mid-tier GPUs to achieve the same or even greater computing output. This technique, called parallel processing, allows smaller, slower chips to work together as one massive brain. By clustering thousands of slightly less powerful processors, Chinese labs can now train large AI models at speeds close to Nvidia's most advanced systems. Yes, this approach uses more chips and more power. But China has both, cheap energy and an army of engineers. The end result is shocking. They're reproducing great performance without Nvidia itself. Huawei's Ascend 910B and SMIC's 7nm processors are being used in massive parallel formations, driving projects like Baidu's Ernie and Tencent's next-gen cloud AI. So while Washington debates what level of technology China should be allowed to access, Beijing is simply bypassing the need altogether. To show how serious this is, Nvidia's CEO Jensen Huang has spent much of 2025 trying to personally repair the company's broken relationship with China. Huang's actions over the past months reveal a level of desperation rarely seen from a U.S. corporate leader, lobbying both Washington and Beijing in a last-ditch effort to reopen doors that politics has slammed shut. In Washington, Huang has been a constant presence. Since January, he has met repeatedly with President Trump's top economic and trade advisors, including Treasury Secretary Scott Bessent, Commerce Secretary Wilbur Ross, and National Economic Council Director Larry Kudlow, Secretary Peter Navarro, and National Security Council officials. He even presented Trump with a proposal, the Silicon Rebalance Framework, outlining a controlled resumption of Nvidia's chip exports to China under strict monitoring. The plan, according to industry insiders, emphasized that Nvidia's exclusion from China threatens $6 billion in annual sales and could undermine $10 billion in yearly research spending that fuels U.S. dominance in AI. Huang warned bluntly that if Nvidia loses China, America loses the AI race. Trump appeared open to discussion, but his security team pushed back, arguing that any technological concessions would hand Beijing a strategic advantage. Realizing Washington wouldn't move fast enough, Huang took the extraordinary step of going straight to China. In May 2025, he traveled to Beijing and Shenzhen to meet with officials from the Ministry of Industry and Information Technology and the National Development and Reform Commission. He also held quiet talks with executives from Huawei, Baidu, and Tencent, companies that once depended on Nvidia hardware but have since shifted to domestic chips. Chinese state media framed the visit as symbolic cooperation, but private accounts painted it as something else, a plea for re-entry. Chinese officials listened politely but made no promises. They told Huang that China's self-sufficiency plan, backed by tens of billions in government investment, was permanent and non-negotiable. Nvidia was welcome to sell compliant chips, but the era of dependence on U.S. technology was over. Huang returned to the U.S. empty-handed, but something worse still lingered in the air, and things were about to become even more desperate. David Sachs, President Trump's AI and crypto advisor, has been one of the clearest public voices warning that China is catching up fast and is already adept at evading export controls. He repeatedly argued in 2025 that Beijing might be only months, not years, behind the U.S. on key AI capabilities, and warned that rigid export bans could actually accelerate Chinese self-reliance rather than stop it. That public warning set the frame for a tense year of corporate lobbying and diplomatic moves. President Trump and Nvidia's CEO Jensen Huang were in active contact through 2025 as Huang lobbied to restore Chinese sales. The U.S. Congress and national security officials grew suspicious. But what they failed to realize is that their suspicion was useless in this matter. Bipartisan senators warned Huang ahead of his China trips to avoid contacts that might undermine U.S. export rules, and some administration figures resisted any arrangement that might let advanced capabilities leak to military end users. That distrust created a political logjam. Business interests pushing for market access ran headlong into national security gatekeepers worried about strategic risk. Then Beijing added a new twist by escalating regulatory pressure on Nvidia itself. In mid-2025, Chinese authorities opened preliminary probes alleging Nvidia violated antitrust rules tied to past deals, and the internet regulator instructed major firms to halt purchases of specific Nvidia models while the inquiries continued. Reports also documented state agencies asking companies to cancel or pause Nvidia orders, effectively blacklisting certain products from procurement lists. That combination of U.S. export limits, Washington's political caution, and Beijing's investigations left Nvidia squeezed from both sides. The numbers are painful. Nvidia has stopped including China in its official revenue forecasts, a quiet admission that the company no longer expects to make money there. Analysts estimate the total financial damage from lost Chinese sales and unsold inventory to be around $5.5 billion. Nearly a quarter of its global data center revenue has disappeared. Wall Street has tried to ignore the red flags. Stock prices remain high because investors believe in Nvidia's dominance in the U.S. and Europe. But the fundamentals tell another story. Nvidia's manufacturing capacity has expanded in South Korea, Taiwan, and the United States. But none of these markets can replace China's sheer demand. China accounted for more than 1/3 of global AI chip consumption before the bans. Losing it isn't just losing a market, it's losing the heart of global scale. Meanwhile, the United Arab Emirates and Saudi Arabia have quietly become Nvidia's best, perhaps last, hope for replacing the lost Chinese market. In the last 2 months, the story moved from negotiation to partial execution, with U.S. export licenses and Gulf cash starting to create a new sales channel for Nvidia chips that Washington feels comfortable approving. The timing matters. Beijing has closed its doors. Congress and national security officials have balked at reopening them, and Gulf states offer a politically safer place to deploy advanced gear while still generating the revenue Nvidia urgently needs. Concrete steps accelerated in October and early November 2025. The U.S. government approved a set of exports that allow advanced Nvidia GPUs to be used in the UAE under strict conditions, and Microsoft, which won export clearance to operate cloud services there, moved quickly. Microsoft announced it would ship tens of thousands of Nvidia GPUs to the UAE as part of a massive investment plan to expand AI and cloud infrastructure in Abu Dhabi. That move was framed as a gold standard arrangement of security controls and monitoring that the U.S. could point to as a model for license transfers. Reuters and AP reporting confirmed the approvals and the immediate shipments. But the path has not been smooth. Industry sources and data center specialists reported frustration over slow licensing and delays to finalize investment and infrastructure commitments, leaving some Gulf projects paused even after political agreement. Executives say that months after a framework was announced, export licenses and commercial contracts still needed to be signed, creating worry that the window could close if enforcement or politics shift. That friction shows why the Gulf option, while promising, remains fragile. Saudi Arabia has also moved fast, and earlier in 2025 it struck a public partnership with Nvidia and the sovereign-backed AI initiative Huang. The agreement announced in May included a shipment plan for about 60,000 Nvidia chips to seed large data center builds and to stand up AI factories designed to host model training and cloud services. Saudi officials have tied the deal to their strategy to diversify the kingdom's economy and build sovereign AI infrastructure. Nvidia framed these partnerships as long-term hubs for research and deployment. Why do these Gulf deals matter so much to Nvidia? China once represented billions in revenue and vast scale for training models. Losing it left a gaping hole in Nvidia's forecasts and inventory plans. Gulf deals won't immediately replace China's volume, but they can deliver large, high-margin sales, strengthen strategic partnerships with U.S. cloud providers, and provide an outlet for advanced chips that the White House is willing to license. The commercial model looks like this. U.S. cloud firms or vetted partners host the hardware under strict safeguards. Gulf capital pays for the build-out, and Nvidia records the revenue without shipping chips directly into an adversary market. The past 2 months reveal both promise and fragility. The Gulf deals prove Nvidia can still sell advanced chips abroad, but only under tight U.S. supervision. Yet behind those approvals are delays, red tape, and fragile politics. The Middle East isn't a new market. It's a lifeline. And that lifeline is already starting to strain. Because if these partnerships collapse, Nvidia won't just lose billions. It could lose its last foothold in the global AI race. If you found this breakdown eye-opening, hit subscribe and turn on notifications. We're uncovering what's really happening behind the shifting global economy. See you in the next one.